Hello and welcome back to the VC Ledger. Are you looking to start investing in dividend stocks but don't know where to begin? Don't worry, you're not alone. Dividend investing is one of the best ways to build passive income and grow your wealth over time. In this video, I'm going to break it all down for you. What dividends are, how to get started, and how to choose the right dividend stocks for your portfolio. Stick around because by the end of this video, you'll have everything you need to take that first step into the world of dividend investing. What are dividends? First off, what exactly are dividends? Dividends are payments that companies make to their shareholders, usually on a quarterly basis, as a way of sharing their profits. Think of it like a thank you gift for investing in their business. Not all companies pay dividends, though. Dividend-paying companies are often well-established businesses with consistent profits, like Coca-Cola, Johnson & Johnson, or Procter & Gamble. And the best part, you can reinvest those dividends to buy more shares, creating a snowball effect over time too. How much money do you need to start? One of the biggest misconceptions is that you need a lot of money to start investing. That's simply not true. With apps like Robinhood, Fidelity, or M1 Finance, you can start with as little as $5 by buying fractional shares of dividend stocks. Getting started with dividend stocks. To start investing, you'll need to open a brokerage account. Popular platforms like Robinhood, Charles Schwab, and Fidelity make it super easy for beginners. Once you've opened an account, search for the stock ticker of the company you're interested in. For example, Coca-Cola's ticker is KO, and Microsoft's is MSFT. Once you find the stock, you can place a market order to buy shares. And that's it. You're officially a shareholder. 4. Choosing the right dividend stocks. Now comes the important part, picking the right dividend stocks. Here are a few tips. Look at the company's financial health. Check key figures like gross profit, net income, and debt levels. These numbers can be found in the company's income statement, which is publicly available online. Check the dividend yield. This is the percentage of the stock price that the company pays out in dividends. A good range for beginners is between 2% and 5%, but don't be fooled by super high yields. They can sometimes indicate financial instability. Assess the company's competitive edge. Does it have a unique advantage that helps it stay profitable? For example, Tesla's dominance in the EV market or Visa's role in global payments make them stand out in their industries. 5. Diversify your portfolio. Diversification is key to managing risk. Instead of putting all your money into one stock, spread it across different industries. This way, if one sector struggles, your entire portfolio won't take a hit. 6. The power of reinvesting dividends. One of the best strategies for long-term growth is reinvesting your dividends. This means using the cash dividends you receive to buy more shares of the stock, which can compound your returns over time. And there you have it, a beginner-friendly guide to investing in dividend stocks in 2025. Remember, the key is to start small, stay consistent, and keep learning along the way. Dividend investing is a marathon, not a sprint, so be patient and let your investments grow over time. If you found this video helpful, give it a thumbs up, subscribe to the channel, and hit the bell icon for more beginner-friendly investing tips. Let me know in the comments which dividend stocks you're excited to invest in. Thanks for watching, and I'll see you in the next video.